we're having challenge of you borrow loan. Let's assume you have to repay back in a month time. If you don't pay back, they will start tracing your contact and start telling how fraudster you are and the rest. It's a very bad experience.
So whether you have ever taken a loan or not, the Nigerian government want to link your entire borrowing history to your national identification number, also known as the NIN. This isn't just talk, this is happening.
There will be consequences for non-repayment. Although it may not be that predatory like what we have right now, just something subtle. Maybe you want to renew your passports and something is showing that you are owing somewhere and there's no hiding place.
Yes, you heard that right. Your loan repayment behavior could now determine whether you can travel abroad or get an apartment. But before you panic or celebrate, let me break down exactly what this means for you, because this story has some shocking numbers that will blow your mind and implications go far beyond just borrowing money. Let me start with some numbers that will shock you about Nigeria's credit situation.
For us to have consumer credit that feels like it is in South Africa, we need about 180 trillion naira.
To put that in perspective, that's more than 4 times Nigeria's entire annual budget. Currently, Nigeria has a massive credit gap. In 2024, Nigerians received loans worth about 37 trillion naira, but experts estimate that we actually need around 70 trillion naira annually just to meet basic consumer needs. This includes everything from buying cars and houses to paying for education and starting businesses. Here's another shocking statistics. 26% of Nigerian adults are completely unbanked, meaning they have no formal banking relationship whatsoever. These people can't access traditional credit because there's no record of their financial behavior. Meanwhile, the inflation rate hit 26.3% in 2024, making it impossible for average Nigerians to afford basic necessities without borrowing. The average Nigerian earns between 80,000 naira to 150,000 naira monthly, which is roughly $53 to $100. With inflation this high, this is no wonder that consumer loans have become essential for survival, not luxury. So what exactly is the government planning to do with this NIN credit linkage system? Credit Corp is building a centralized national credit bureau that will collect information from every licensed lender in Nigeria. This includes commercial banks, microfinance institutions, fintech apps, and even digital lenders. Every time you take a loan from any of these sources, that information will be automatically linked to your NIN and will contribute to your credit score. Your credit score will be a 3-digit number ranging from 300 to 850, and it will follow you everywhere your NIN is required. The system will use both financial and non-financial data to generate a credit score. Financial data includes your loan repayment history, while non-financial data could include things like your employment history, education level, and even your social media behavior. Under this new system, every adult Nigerian will automatically have a credit score whether they want one or not. Many Nigerians are asking why the government choose NIN instead of the bank verification number that already exists, the BVN, which I think is a smart question, but the answer reveals the true scope of this plan. While BVN only works within financial sector, NIN reaches across multiple sectors including telecommunications, taxation, licensing, and government services. This means your credit score won't just affect your ability to get loans, it could impact your ability to renew your passport, get a driver's license, register for NYSC, pay taxes, or even rent an apartment. Some landlords may start checking credit scores before accepting tenants. The government is essentially modeling this after the American Social Security number system, which tracks citizens across multiple aspects of their lives. However, it's important to note that the US system developed over decades, while Nigeria is trying to implement this comprehensive system all at once. This cross-sector integration is both the system's biggest advantage and its biggest risk. On the positive side, it means that you can build credit even if you don't have a traditional bank account. But on the negative side, it means that a financial mistake could affect multiple areas of your life. Let me explain what this means for you in practical terms. If you default on a loan from any licensed lender, that information will be permanently attached to your NIN. This could affect your ability to access government services, get employment in certain sectors, or even open new bank accounts. For existing borrowers, this system could be either a blessing lesson or a course. If you have a good repayment history, you will finally have a way to prove your credit worthiness to lenders. If you have struggled with loan repayments, this system could make it much harder to access credit in the future. Despite the risk involved, this system could bring significant benefits to Nigeria's economy and individual citizens. First, it could dramatically increase access to credit for people who were previously excluded from formal financial system. Currently, many Nigerians can't access loans because they don't have a credit history that banks can evaluate. But with this new system, even people without traditional bank accounts could build credit through alternative lenders and eventually qualify for larger loans from commercial banks. The system could also reduce interest rates across the board. When lenders have better information about borrowers' credit worthiness, they can price loans more accurately. Good borrowers could access loans at lower interest rates, while risky borrowers would pay higher rates that reflect their actual risk level. For the economy as a whole, better credit information could unlock the 183 trillion naira credit gap that's currently holding back Nigeria's development. This could enable more Nigerians to buy homes, start businesses, and invest in education, all of which could boost economic growth. The government also believes that this system could help reduce corruption, particularly among civil servants. The theory is that if people have better access to legitimate credit, they will be less tempted to engage in corrupt practices to meet their financial needs. However, there are serious concerns about this system that every Nigerian should understand. The biggest worry is that it could trap vulnerable people in a cycle of financial exclusion. If someone defaults on a loan due to circumstances beyond their control, they could be locked out of multiple services for years. Consider someone who loses their job due to economic downturn and can't repay a loan. Under this system, they might not be able to renew their passport to seek opportunities abroad or get a driver's license to work as a commercial driver. This could make their financial situation even worse. There's also the question of data privacy and security. This system will collect enormous amounts of personal information about every Nigerian adult. Who has access to this data? How is it protected from hackers or misused by government officials? Of course, you expect critics to comment on this, and they are also pointing out the irony of the government targeting small borrowers while ignoring large-scale corruption. The technical implementation of this system faces enormous challenges. Nigeria currently have over 200 million people, and ensuring that every adult has an accurate credit profile will require massive coordination between government agencies, banks, and fintech companies. There is also the question of data quality. Many existing credit records in Nigeria are incomplete or inaccurate. Building a comprehensive system on top of flawed data could create more problem than it solves. The system will also depend heavily on loan providers accurately reporting borrower information. This includes not just banks and registered fintech companies, but also microfinance institutions and even informal lenders. Getting all these entities to comply with reporting requirements will be a massive undertaking in my own thought. To understand how this might work, it's helpful to look at how similar systems operate in other countries. The United States has had credit scoring for decades, and it has become an essential part of the American financial life. Americans with good credit can access loans, mortgages, and credit cards at favorable rates, while those with poor credit pay higher rates or are excluded entirely. However, the American system also has significant problems. Many Americans struggle to improve their credit scores even after their financial situations improve. Credit reporting errors are common, and disputing them can be a lengthy and frustrating process. In contrast, some European countries have taken different approaches. Germany, for example, relies more heavily on income verification and employment history rather than credit scoring. This system tends to be more forgiving of past financial difficulties. China has implemented a comprehensive social credit system that goes far beyond financial behavior to include social and political activities. While Nigeria's system isn't as comprehensive, there are concerns that it could evolve in that direction. What do you think about this plan? Is linking your borrowing history to your NIN a good idea that will help more Nigerians access credit? Or do you think it's a dangerous overreach that could trap people in cycles of financial exclusion? Let me know your thoughts in the comments below. And if you found this breakdown helpful, please give it a thumbs up and subscribe to the channel for more. Thanks for watching, and I'll see you in the next one. Bye for now.